Hi there, traders, and welcome to Trade the Structure. So we're getting into the start of the Asian market session, so it's time for a review of what happened overnight and looking at some key levels. We could be in for some good moves coming into the equity market. Now, there's been a few since I reported last. I think it was Monday. We talked about just before the US was closed. So they were closed on Monday night, and they reopened last night. So they played a bit of catch up. It wasn't a big night in the US, but we're seeing things that are getting a little bit extended, and momentum on the stock market indices starting to slow, and a few other key things that are moving. So the US dollar's rallying, bond yields, which we'll show in just a moment, they're starting to push lower. Sorry, bond yields are pushing higher, bonds are pushing lower, which is not really good for equities. So we'll just take a look at those now. There was some strange moves. Now, I'm not sure where this gap down, okay, is a rollover. This is a futures contract. I'm not sure if that gap down is a rollover into a new contract as the old one just, and we have to re-establish some new lows or reposition lower. So that's not good. If it's not, then it's a strange move. That means equity, that the yields are very, very, they're pushed right up again. So they're really starting to push up, and bonds are pushing into lows. And you've got on Friday, we've got payroll numbers coming out, so they could be looking at that. You're looking ahead to that. The US dollar is starting to bounce back again. So I suggest on the US dollar, probably some shorts that are starting to cover as it's readjusted lower. Just coming into that number too, because if payrolls come out weaker, you got the consumer data come out last night, which it was not as good as the previous number, but it was better than expected. So the consumer is still hanging in there in the US, which is a very big part of their economy. Now, if they start to fade with this high inflation, and their expectations are that inflation is going to go higher or remain high, then the Fed has to do something. They have to act with interest rate rises. So really, it comes down to what data keeps coming out, the economic data. If the economic data keeps coming out relatively buoyant, then the economy is relatively buoyant, growth buoyant, and they can fend off these higher inflation. But if it's not, if it's going to really start to crimp, you've got the housing market in the US is starting to not cave in, I guess, but you go and look on all your Twitter feeds in the news. Look at Reuters. A lot of the headlines come out are negative now. They love the negative news as well, so you've got to bear that in mind. But a lot of it's coming in negative, and it could be like a self-fulfilling prophecy as a sell-off. The news starts talking it up more and more and more why we should be down, then the market's probably going to react there if we can just start to see some profit taking. But we'll wait and see. At the moment, we'll go over to the equity markets. The US has bounced, so we've got this big leg down, initial leg down, secondary leg down. That found the base at 38.60. We've bounced back. Okay, we've taken out this the anchor to that downtrend at 40.80. So generally, when you're taking out the anchor, you start to go into contractive mode. So the leg was predominantly down, the trend was down. We're contracting that, or we're in a pullback mode, you like to call it. So we could be just, we're getting a bit, you can see getting a bit stretched up here, a bit extended on the momentum. So the momentum's starting to roll, which means it's been up. Momentum's up, it's starting to roll down. We could see some more selling come to the market. It's just where to. So I'm expecting we're going to get a bit heavy up here. We're going to start to roll over now. The market overnight wasn't too bad. It sort of gapped down, not gapped down too much on the open, but sold off in the open, bounced back, and then sold off into the close. So it could start to get a bit heavy up here. Now, if you go look at the Dow and the Nasdaq, same sort of scenario. We opened down as you would, after this kind of a run up. You expect that, and you can see momentum starting to get a bit heavy as well. So it's really, from here, it's really whether we're going to do this type of thing, a big sell-off, or we're just going to have this type of thing and start to get a secondary leg up. Okay, so but either way, I feel like we're going to sort of roll from here. And if the economic numbers come out weaker than expected, expect this kind of a scenario to play out and start to push into new lows, because everyone's talking it up. We all feel we're going to that bigger interest rate cycle. A lot of them, look, like I said, look at your Twitter feed. I mean, a lot of them is rubbish. You're going to bear that in mind, but there's a lot that I follow that are actually quite good. Okay, and from a macro perspective. All right, so that's what I'm following, and a lot of them are saying that the bigger picture is the rate rising cycle. Now, that rate rising cycle, generally in history, it pressures equity markets, because as you start to get less yield in equity markets and bond yields go up, bond yields become more attractive for the bigger boys, for the funds to get yield. Okay, and if they're not going to get anything in equities, they're going to start to roll over from equities, sell out of that, and into bonds, which means there's a sort of like a cap or some pressure into the markets. Okay, and that's generally what's happening on the rate rising cycle. And that's what we're coming into. Now, we are at major highs too on the equity markets, which could mean there could be a big sell-off on the cards. And that's that's the general consensus. Whether it's rubbish or not is yet to be seen, but I do expect some swings and roundabouts in the overall markets. Over the Nasdaq, which is sort of a key barometer for interest rates and in inflation. Now it's had a bit of a bounce back. We've got through that anchor. We've got through this level. Now it could be just a flush of that level, and that's around 12,540 or 550. This level just in here before we roll. So it's a lot like I was just saying before. Whether we get this kind of thing, we get a shoulder in here, and we head down quite a bit more and take out these lows, or whether we sort of start to find a bit of a base in here to build a high low. Okay, we're either looking at a higher low that's a sort of corrective move down. Okay, so it's like we don't know. We don't know it's been one of the two, because this inflation and the interest rate rising cycle is taking a long time to play out. So we could easily get this sort of kind of a blast higher, retest into these levels, 13,570. Everyone's looking at it the same, because a lot of people, if you get these rallies, they still got that buy the dip mentality, okay, which we've had in the past, because every time in the market was rallying, the pullbacks, everyone's going, this is the time we're going to roll over, this is the time. Instead, they were getting soaked up, they were getting smashed, any shorts were getting smashed, and we're heading higher. Could be a different scenario now, but there's still that lingering buy the dip mentality, which is, mainly for retail, which could see they're looking at this big move down as a massive buy the dip, and they're looking at this little rally, let's buy the dip, and we're looking to new highs. Now, we could be, like I said, it could just be completely rubbish and we roll over and have a massive sell-off, or we do get this kind of a scenario, we start to come up, they're proven right for a little while before we dump. Okay, but we'll keep an eye on that. Excuse me. So over to the DAX, same sort of scenario. We're coming up to these all-time, well, not all-time highs, but we're coming to these key highs at 14,570. I think the all-time highs are further up at 14,888, which it's touched on a few times. Actually, no, we're miles off that. I lied to you. A big move down here off the highs, big contraction back up to 14,888. Then we've had this pullback. So we've talked about this for quite a bit. This kind of a move down was more contained than the first sell-off. Okay, then we started to look at holding this. I expect it to expand higher. We've got this initial leg up. That's your secondary leg up. Took us to 14,570, which I was speaking about yesterday as fading that. Okay, fading that. It's gapped up on the open, and then we've got this bit of a selling into the US close. Okay, so what I'd be looking for here is, are we going to have a bit of a higher low here and start to pressure back up? I sort of feel that we're going to have, because we've got this major double top, we're going to have a bit of a pullback to that 14,200 area. Okay, back to this zone at the very least. Okay, so I'll be looking for a shoulder there more than anything else. This trend down could continue, could just keep jamming down there if the US sells off more tonight, but we'll wait and see. But either way, it's found that a key level, it's working off that key level, and the same with the FTSE. The FTSE is working off sort of these key highs, which it's 76.83. It's traded into that zone a fair few times and way back here. This is on we're talking daily resistance here. It's traded off before, failed, all the way back up, failed, all the way back up, failed. It is holding this, as a higher low comparative to this 68.28 sort of lows in here. It is a higher low. We've had this kind of a choppy sell-off here. The market, when you get this kind of move, you get it straight down. Okay, then it grinds all the way back up. Now this pullback is a lot deeper than what you would expect if the market was going to fall over. Okay, and the same here, big sell-off, a deep pullback before you got this retest and lows. It is choppy overall, but we could come into this 76.83 level before we start to fade off there again. But either way, I think momentum is, that's not great for momentum. Okay, when we're getting up to these highs, it's going to get a bit heavy, I would expect. Now, same with the UK, you've got US and Europe as well. As long as those economic numbers are fairly strong, are in line, are strong, okay, that means that the economy could weather higher interest rates potentially. But once those numbers start to come in, the consumers are starting to get battered by higher inflation, paying higher prices. That will weigh on the economic numbers. And if they start to tighten their belt and don't spend, then that's going to weigh on those economic numbers, which you would expect to flow through into the share market and to start to see some profit taking, especially after we got this extension up. Okay, over to the XJ8. So they're all very, very similar. We've had a good little bounce up. They're getting a bit extended for momentum on the upside. Maybe time for a pullback. If the pullback's going to follow through to new lows, or whether it's just going to be, pushed back down into a higher level before we start to ramp up again. Maybe something like this, or like the others. We're going to get this move down, bounce potentially before we start to get a bigger sell-off and back down into these lows at 69.70. Okay, so it's really, what are we going to do from here? I mean, that's obviously, but whether we're going to get higher inflation, don't forget we got higher, what happened in between Europe and Russia with regards to their oil. They're no longer going to want to import oil from Russia. That means higher oil prices I would expect to be capped, to be supported. So higher oil prices for longer add to inflationary pressures. Okay, so that's kind of what the market will be looking at as well, really focusing in on Hang Seng. Hang Seng's sort of broken up. It's not looking too bad. I mean, big sell-off, that's Evergrande sell-off, big bounce back, another sell-off, made a higher level. So if that's the case, we're kind of looking at a bit of a bounce, potentially that's your first leg up. Just clone that. And then we're looking for our secondary leg up, potentially from those lows to take us, up maybe somewhere in this zone. Okay, which makes sense. We've got a little, little few levels through here, which is traded through before. That could easily take us up to that, was it 23,480? So a bit of fat on the upside, but it's whether it can get through this level here. Now, if this starts to fade back below this zone in here, 21,200, say, back below today and in coming sessions, then that could be sort of your retest fail, your double top in here, minor double top, which would lead me to believe we're going to have a bigger move down. So it's in the balance at the moment on the Hang Seng, and with a lot of these markets, the Nikkei, that looks to me like it's just starting to rally up. It's just where to. We've got a zone in here, a little level in here, which you could flush up into today. It's around that what is it, 27,550, that area through here. It could be that you can see this little minor lower high in here. If we start to crank down and start to take out those lows and hold that lower high, we could just be pressuring a bit lower, which could mean we get to back, retest back into 27,040, which is a couple of hundred points away, which could easily happen today. So I'm sort of leaning towards a bit more of a back and fill back down to that level at 27,040 today. Okay, over the dollar. Now the dollar's it's worked its way off the lows. We've got these lows, a zone through here, 101.35. It's worked its way up off that level yesterday, and it makes sense that we start to look to squeeze out some of these sellers, and we start to see some buyers re-establish, because you've got that major employment number out on Friday, the payrolls, which is a major, probably one of the biggest numbers in the US, and that's going to be a bit of a heads up now. If they're figuring that that's going to be relatively strong, maybe some more pressure into the US dollar, because it's a hard one, because US dollar has been rallying on the back of high inflation and higher interest rate rises. Now the Fed they talk up being aggressive, but they really don't want to be aggressive. They don't want to raise rates too hard and start to smash the market. And that's what, once it overcooked to the upside through this, the US dollar through that daily resistance zone, we've got that flush right up through, and we've got lower highs working into as they start to work themselves back out, as they realize that maybe the Fed's no need to be aggressive. And it all comes down to those economic numbers. Okay, so if those economic numbers continue to be strong, potentially higher inflation, or at least a resilient economy, but higher inflation would mean a higher US dollar. Okay, so we'll just wait and see how that goes. But for me, I would expect that to sort of keep up off that 101.35, potentially between that and that 102.38 level into Friday. I mean, there's a few days to go still, and it could be a bit of action. But the fact that we're starting to contract up and off those lows, to me, means a bit of choppy action, and that makes sense coming into that Friday's numbers in the US. So the euro, obviously, US dollar rallies, euro goes down. Okay, so we've seen it break through that little anchor at 106.98. This support through here broke through there. It's bounced back. Now we get more another rally into the US dollar. Expect that euro to start breaking down through that 106.98. It's looking a bit toppy up here, but it's yet to produce a lower high. Okay, we'll wait and see. The pound is much the same. It got through this, to me, little anchor. You can see it forming up here as it's failed to get through 126.51. That little resistance through there, and start to fail off here, held a lower level here and press through. Okay, press through that 125.87 area, which I would expect is a bit of a break to that trend up. So whether we get to go sideways and we test into this is the major anchor around through here. To me, that's a major anchor to this trend up. Then you got another anchor here. So that broke, leg up, pull back, broke, leg up, broke to the upside. And now we're starting to contract this leg up. So if it starts to, as long as it holds above 124.70 or this zone through here, then longer term it could just pull back of this leg. So it's just contracting some of that recent leg up off that 25.10 area. And then we start to find that it starts to build high lows again, and starts to work its way back up for another leg higher. Okay, but this is kind of what I was looking at. Projection up. It failed to get just up there, which is around that 127 area. Failed up there, and it's starting to fail off there. So potentially there's a bigger move down, and that would be in conjunction to a bigger move up in the US dollar. The Aussie, you can see it's it's had its initial leg up, secondary leg up, it pressed into that 71, 75 level. It's flushed up and through just to probably extend through that level, take out a few stops, probably drag in some buyers, trap some buyers. Now it's what are we going to do from here? If this is the leg, it's extended, expect some more selling. I don't, if it can sort of chop around here and hold, then yeah, it could extend up. But I'm banking on the fact that it could have a deeper correction. So you've got, something like that. You got to move up, you get a deeper correction. This kind of a move up, you get a deeper correction. I expect a deeper correction, potentially down to 71.30, and that would probably match up with some more US dollar strength too. And if equity markets start to sell off, expect this to start to head south, and higher US dollar puts pressure on commodity prices, which in turn puts pressure on the Aussie dollar. Okay, US yen. Right now, the US yen is ramped up. It's ramped up off that 27.04 area, and that's got to do with that US dollar. Now, there's no safe haven buying into the yen at the moment because there's no real reason to. It generally equity market sell-off, you get some safe haven buying into the yen, which could offset that rally into the US dollar. But at the moment, it's not. It's all about the US dollar. Okay, US dollar ramping up. You've got the US yen ramping up. Now, we could find that it's going to find a bit of pressure up around this zone. You can see it's reacted up there, reacted off this previous high, and that's around that 128.855 area. Or it could just continue to hold higher lows and press up to 129.55. Right, so that's that. Gold, okay. Gold's a shame, but everyone's talking up inflation hedge, and safe haven. It's none of those at the moment. It's just a pure. And I think I've spoken about this before. And trying to drum it into you. Look at the US dollar. The US dollar is moving a bit like the euro. Euro is moving in conjunction with the US dollar moves. Now, same with gold. US dollar starts to rally, you start to get gold heavy, and we're talking about this in the morning report and the trading plan. Which if you want more info on that, just go to the website www.tradethestructure.com. That's free. So that's the levels we look at intraday and for trading levels, and we're talking about this gold as getting a bit heavy up here. I didn't expect it to break up through 1867 at all because the US dollar looked like it was starting to form a base. Now, if the US dollar rallied, I was saying gold's going to come off, which has done exactly that. Okay, so where to? Potentially it's come down to 1835. It's into that zone there. If it continues to hold, you can see it's holding a lower high. If it continues to hold lower highs, it could just break straight through. Okay, and I guess that's going to be very much dependent on what the US dollar does. Now, like I said, if the US dollar doesn't do too much into the payrolls on Friday, then gold probably won't do too much. You might find it does react off this 1835, but don't expect a reaction straight up from here. Expect a flush and then a reaction, okay, and then look for your higher low and potentially a short-term scalp higher. But for me, until that US dollar starts to see some serious weakness, I don't think gold's going to see any serious strength. It's going to be more of contracting of this bigger move up. Okay, oil, interesting one, smashed up. And if you look at that, that's your initial leg up. You measured that out. So if we were watching this, looking for that extension back up to 120, and it got there. Okay, and it got there just all through Asian and European session yesterday. Smashed up, spiked up into that level, hit the targets, and then basically got hammered after that. So about a profit taking. So from here, are we going to get this kind of a move down, a bigger move down, which would suggest to me we're going to get a bit of a ramp back up, potentially to test 116.40, or even above that before we get a lower high working down to potentially 111.80 and even below. Okay, so it's more about the correction, leg up, correction, leg up, and we're going into that corrective mode. Copper. I haven't really looked at copper for a while, but it's it's reacting with that US dollar. US dollar ramps up, it's heading south. So it's we tried to get up through this high, got up through the high, flushed before that the heavy market weighed on that on copper. So for me, that's essentially a double top, a retest fail of that major level on a major scale, which would lead me to believe we're going to start heading into these this support zone through here, or this low, sorry, at 421.30. Okay, and it's a matter of holding, maybe we pop up from here, hold a lower high, something like this, and then we keep going lower. Okay, but I feel that that's going to work its way back down to this level at the very least. Okay, we'll get on to cryptos. Cryptos at a bit of a ramp higher, which is looking pretty good. At the moment, you've got Bitcoin, that consolidation through here around that 30. A lot of people, I thought it was going to sell off. If it can't sell off, it's going to sort of ramp up a bit, dragging some more buyers before potentially we get another sell-off. And look, that could be initial leg up. If we just clone that, we take that across and we look at it from here, it could be looking to 33, say 400, 500, potentially up into these, to flush through this sort of high up here, which it just backed off from overnight. We had a bit of a spike high, so spike high, consolidate, spike higher. You can see the flushes, flush down, spike up, but at the moment the trend is up. okay, we could be getting something like this, another spike up and through, or at least up into that level 32,500, say, or 33. Okay, just keep an eye on that. A little minor trend is up at the moment, but you got the good thing is momentum's fading, going from that buying momentum to selling coming in, but it's consolidating around this level, consolidating those highs, which is a key thing. All right, we better finish it up there, guys. Thanks very much for joining me, and we'll speak to you soon.